Strategy is completely breaking the tape right now, surging over 16% in a 48-hour window with an aggressive 7.9% breakout on Thursday. But the real structural headline rattling institutional desks isn't this sudden green day-like candle. It's the fact that Michael Saylor, the ultimate maximalist who famously shouted, "Sell your kidney, don't sell your Bitcoin," just blinked. For the first time ever, the firm formally modified its prospectus to allow for potential spot liquidations. Is the core crypto proxy thesis officially dead, or is the market misinterpreting this balance sheet optimization? Let's check the spreadsheet. Strategy wrapped up the session at $100.77, following a sharp capitulation down to an $81.81 local floor on June 26. Before we audit this corporate pivot, smash the like button and subscribe. If you want to front-run macro tech rotations, options order flows, and institutional block allocations, click the link in the description to unlock our private trading desk. Retail chasers assumed this massive 16% squeeze was triggered by another aggressive spot accumulation announcement, but the mechanics reveal the exact opposite. The firm updated its capital framework, allowing them to trim spot allocations to buy back equity. Bears are already screaming that Saylor is structurally shortening his own thesis, but that's a fundamentally flawed read. Historically, Strategy levered up via high-yield convertible debt. Adding a cash-retaining liquidity exit hatch drastically expands their fiscal safety. JP Morgan just dropped a flash note analyzing the headline risk. The immediate headwind isn't that Strategy is offloading size today, it's that the market must now price in execution risk from a massive structural seller that previously boasted a zero-sell model. The sheer scale of this entity is unhinged. Year-to-date, Strategy has absorbed roughly $8.2 billion in physical spot Bitcoin, commanding nearly 70% of total aggregate market net inflows, while policing over 4% of the absolute global supply. So why did the equity print a massive 16% squeeze on this news? Because smart money noted their cash reserves quietly expanded to $2.25 billion. There is zero forced liquidation risk here. The balance sheet risk dropped, and institutional capital returned. Concurrently, the underlying spot asset staged a synchronized macro bounce. As the rates complex adjusts for higher near-term rate cut probabilities, risk-on factor liquidity flooded straight back into Coinbase, miners, and the entire digital asset cluster. Can you safely chase this vertical size? Near-term delta expansion means local volatility is bound to stay elevated. But if spot structures hold, Strategy remains an ultra-levered, high-beta vehicle that institutions trade as an actively managed corporate ETF. Checking the Bloomberg terminals, sell-side models show a massively fractured target spread spanning an ultra-conservative $130 floor to an unhinged $570 ceiling, averaging out near $292. This street isn't pricing the software. They are trading the beta. Ultimately, the forward runway depends entirely on Bitcoin's structural macro trend. If the primary digital asset enters a sustained expansion leg, Strategy will heavily outperform on the upside. If the spot market rolls over, expect a violent drawdown. Let's stress test your conviction. If you were piloting Strategy's macro book, would you maintain pure diamond hands, or would you take chips off the table to lock in yields? Hit the notification bell, subscribe, and drop your tactical thesis below. See ya!